What's up, DeFi community? Kevin Moeller here with DeFiancy, your decentralized finance agency. So what's going on in today's DeFiancy Insight? Well, we're going to talk about the market structure. Hey, are we in a bear market right now? Are we in a bull market? What do we see happening in the short term, mid-term, long term? What's our outlook? What are the charts saying? You're going to see what we believe is going on in the market, which is very important for your investment thesis going forward. Also, there's an FOMC hearing talking about inflation before the Senate. That's a big deal. We believe the markets are going to react to that. What's going on with this hearing? When is it? So you can put it on your calendar. We're going to talk about that as well. So today's short DeFiancy Insight video is very important, in my opinion, for what's going to happen in crypto in the near and midterm happening this year. So take a look at it, see for yourself, like this video, make sure you subscribe to our channel if you like updates like this, and also link in the description below, you can join our Discord so you can actually communicate with us and the Defiancy community. So we'd love to see you in our Discord, but without further ado, let's hop right into today's Defiancy Insight.
Everybody, let's just jump into this. So if you've been watching the markets in the last few days, we've had a bit of a downtrend right here, starting at about 3,400 for Ethereum. We're going to look at Ethereum today. I mean, it's basically following the same path as Bitcoin. This was pretty scary for some people because they just thought, a lot of people just assumed that we were just going to retest this range up here at about 3,700 at some point. We did not. We had what's called a double top here. This is on the 4-hour. Typically, when that happens, it's a pretty strong rejection, and you're going to go down, especially when you're in a bear market like we're in right now. I think objectively we are still in a bear market, and we're going to go into why I think that here in a few minutes. I think with this little bottom we have here, we found this earlier today. This is primarily from liquidating shorts. Open interest has been reduced, meaning we did lose some leverage, and that was obviously people losing their positions, getting stopped out, liquidating on the short side, going up. So I wouldn't get too excited about the price action right now. I do think that potentially it could go higher from here. I think it could easily test this range at some point, assuming we get some momentum. But to be honest with you, I think that it's more likely to be kind of choppy and sideways, maybe in this range here, or we continue to the downside. I do think we're going to retest this roughly 2,900 level we tested when Bitcoin, hit 29K, or I'm sorry, 39K a couple weeks ago. So, I'm still leaning to the downside, but look, trading is going to continue, and it's a game, and we liquidity hunt. And by liquidity hunting, you move price around, you stop people out, there's movement, right? But it's derivatives. I think spot, it's going to be very hesitant, and you need spot buyers to continue up. I think they're going to be very hesitant to really ape, so to speak, at 3,700 right now. I think retail is, still kind of, jaded, so to speak, from getting ripped in May, and many people right now are a little cautious about the crypto markets, which they should be, right? And we're going to go into why I think people really, do need to be cautious here in a few minutes. But I do want to point out that we're probably going to have a significant challenge here probably in the next few weeks. I think here at this 2,900 level, I think if we breach that level, it's not going to be good, guys. I got to be honest with you. We're not in a great spot now, but hold on. I'm trying to get to the daily to zoom out a little bit. It's really not going to look good, okay, if we break below this level, because as you can see, there is a lot of room here, okay? Think about all of these little points of activity as like floors, okay? These floors help you from falling or moving up too quickly, okay? You have liquidity there, and you need to eat through liquidity to go up and eat through liquidity to go down. There's really no floors here, guys. If we don't hold this level, I mean, I'm not saying we're going to go there instantly, but we're probably going to come down to here, okay? At least somewhere in here, okay, like 2,500 level. But I think it's likely that we would probably go even lower. So we could go even lower than this, but I think if we do break this level, it's pretty much guaranteed that we're gonna end up settling somewhere around here, and it'll take a while to figure that out. So this is a very, very key level, this roughly 3,000 level. Okay, so keep an eye on that. If you have collateralized positions, know that if you fall below this, your debt ratio is going to be much lower than it was before if you're collateralizing a lot of Ethereum. Okay. You may ask, why do I think we're in a bear market? Well, I've talked about this for a while, about the fundamentals of why I think we're in a bear market, but from a technical analysis standpoint, I think you can actually illustrate it like this. I really believe that above this 50 for Bitcoin, it's about 53K roughly. I think above that level, we're clearly in a bull market. And I think below that and up to about 46K or down to about 46K is kind of neutral. Like we don't really know where we are. We're kind of like maybe, there's some hope, there's some cool things maybe on the timeline, things that look bullish, or things that are bullish in the future, but you don't really know. But once you break that level, notice how it was very just bam, super bearish dump right there. That's a signal, okay, from hedge funds. That's a signal from big investors. Now, some people say, well, that's liquidations. Yeah, it's liquidations, but if the institutions were interested in buying, they would have. So they didn't buy. They just let it go, okay, and they want to buy it lower is what I'm saying. So you're kind of in a bear market here. You're expecting things to go low, right? If you're not going to buy here. And I think that's where we're at. Like, don't get me wrong. It's still, I should have broke this up and said, kind of bear market, because we haven't really hit the real bear market yet. I think that's below this level where a lot of hope is gone. We still have a little bit of hope. Actually quite a bit, relatively speaking, if you want to like compare it to like 2018, 2017, or 2018, 2019 days, right? But yeah, I just wanted to share this because I really do think that these are really the key levels here going forward. And as we go down, I hope we don't. There's some key levels there too. The big thing I want to talk to you guys about today, I want to spend quite a bit of time on this. But before I go into this, I want to say, look, at DeFiancy, we're trying to be different. We don't want to be like these shilling YouTubers that just like give you a bunch of crap and a bunch of useless information and shill a bunch of tokens. We're actually trying to help people navigate the space and, make it in DeFi. We want people to be bankless. We want people to, be able to be full-time crypto is what I should say. And to be able to do that, you really have to watch your finances, right? You can't allow yourself to be overexposed and to endure 50% corrections if you're not prepared for it, especially if you have a lot of collateralization, a lot of loans taken out and stuff, right? So I want to bring this to your guys' attention. Anytime we have one of these FOMC meetings, excuse me, I'm going to be talking about this. So this is when these meetings, by the way, are when the Fed basically discusses, like this is like the State of the Union for the Federal Reserve, basically. They go into details about like what's going on, and obviously with the current events with inflation, that's like the center of attention right now. Like they're going to be talking about inflation every single report heavily pretty much the whole time. Because right now in the United States, we have 7% inflation, guys. 7% inflation. When you compound that over several years, you have a serious problem. It doesn't take many years for you to be at 50% reduction of value in the United States dollar. Think about that. So that is a very alarming number. We were at less than 2% like before COVID, all right? So this is completely unacceptable, and we are at a very interesting a point. And actually, I should say the Fed, Jay Powell, they are at a very interesting fork in the road here because they have two options. Okay, this is not complicated. Everyone seems to think that this is going to be this is a super dynamic situation in terms of the choices that the Fed makes, but it's not. The dynamics are or the situation, the environment is very dynamic in terms of like what actually affects inflation. But the Fed, their toolbox, it's very simple. They got a toolbox with one tool in it. Okay, raise rates, lower rates. Okay, you have a bad employment, right? You have high number of unemployed people. Well, you increase rates. Okay, people take out loans, they hire people, right? Now, when you have high inflation, you have to reduce those rates. Okay, so what would really be bad is if we had high inflation and unemployment. Luckily, the unemployment numbers aren't that bad, so they are, they're more likely to go and raise or lower rates, right? Meaning it's a high probability, which obviously we've talked about this before. They are planning on raising rates. Now, the interesting thing about this is they don't actually really talk about what's going on in these meetings. When you watch these meetings, basically what's going on is they signal code, okay? Because they can't actually talk to you, okay, like I'm talking to you right now, okay? Because if they actually spit facts and say, look, we're going to do this, we're going to do this is how we're going to do it, and this is when we're going to do it, the whole market would collapse. It would freak out. So what they do is they get up there and they kind of dance around, say a couple of words, and they kind of like hint towards things like, this is what we're going to do. I'm telling you, you can't say I didn't tell you, without actually saying it bluntly. So expect that. But the reason why I want to mention this in terms of the crypto markets is this is the most important story of the year. Inflation, okay, is the most important story of the year, and it's going to affect crypto massively. And I'm going to give you my case for why. I told you that the Fed has two options here. On one hand, what it can do is it can raise rates, right? And what that'll do is it's kind of like a damper on inflation, and it'll actually reduce inflation over time. Okay. Now, when they do that, it's going to affect the markets. Okay, equities are down today. The Nasdaq is down like 2.5% because tech stocks are on the risk end of the curve. Okay. Now, there's another thing, or there's another path that they could take. They could say, well, you know what, screw it, we're not gonna lower the rates. We don't want to piss off the rich people, or we're not gonna raise the rates. We're not gonna piss off the rich people. We're just gonna piss off the poor people right now, which 40% of people right now are dramatically affected by inflation. Everyone's affected by inflation, but 40% of people in this country have less than $1,000 in their bank account, and inflation will dramatically affect your ability to survive off your current spending habits. They're going to notice reduction of their lifestyle very quickly. And what you're going to see is the Fed realizes that Biden will not be reelected if this number does not go down. The current administration in power will not be reelected. They know this. So they're going to be politically pressured to get that number down, even at the expense of the stock market. I do believe that. I don't believe that they're gonna do everything in their power to appease both parties. But at the end of the day, if civil unrest unfolds, which is a likely probable event, or I'm saying two of the same words, it is a probable event, okay, if they don't lower the inflation, okay, they're not going to stand for that. They do not want to see that, okay? The administration wants order in that sense, all right? So I believe that they are going to take the road of saying, look, it is what it is. They're not going to say it like that, but that's the route they're going to take. And I do believe the equities and many other risk-on assets are going to be affected, and crypto is at the end of the risk spectrum, meaning it is the most risky. It is after tech stocks. The fact that crypto didn't dump further today, though, was a good sign, all right? Because, I mean, as the Nasdaq was dipping further, crypto actually bottomed out. But I do believe that over time during this year that the crypto markets are going to have a rough time because they are on the other end of the spectrum, or on the end of the risk spectrum. And to kind of elaborate a little bit more on why I think the crypto markets will go down this year, the magnitude of that is to be determined, but I do believe the direction is going to be down, is because in 2021 the narrative was that we are going to get, the narrative was TradeFi was coming in, basically, right? TradeFi institutions, traditional finance, they're in here and they're going to be buying up Bitcoin and other crypto at some point. But it was mainly Bitcoin, right? And they did to a certain extent. I think a lot of it was overblown, but they did get in and buy crypto, and it was reported, and people FOMO'd in, and it was a good time for a lot of people, right? But they used the same rails or the same infrastructure, the same system to get that capital in there, meaning they looked at rates first and said, wow, rates are really low. I can take out a bunch of money and buy crypto, which has huge returns, and and the rates are really low. Well, as rates go up, that asset now becomes riskier, because you got to pay off those loans you take out. So if these loans aren't as cheap, that capital is going to come out. And it's definitely a whole lot of new capital isn't coming in from those same people that are taking those loans out. So it's very simple. It's a very simple logical argument to make here that yes, capital is going to come out because they're going to have to de-risk, right? Knowing that rates are going down or going up rather, okay? And then they can put it into something that is more favorable, like U.S. Treasuries, which is like basically no risk and has a decent return right now because of the market conditions, and that's going to continue, right, throughout the year until they get this inflation situation handled. And the duration of this is unknown, but there are people who believe that, like Jim Bianco, a great guy on YouTube, you should check him out, and he's also on Twitter. He thinks that by March we're probably going to peak, at about 7-8%. But it's going to take more than a year to get it even to like 4%. And that's with aggressive tapering, raising rates, which causes bearish market reactions. So look, guys, we love crypto. We think crypto, and by the way, future wise, I'm not worried at all. Long term, it's we're going to act like it never happened 5-6 years from now, okay? But over the next couple years, it might be a little rough for crypto. All right? Hopefully it's less than, a couple years. Well, I think that's all I really want to talk about. I think this is really the big story right now, and I can show you guys projects. We can talk about layer 2s, NFTs, and gaming. But look, it's not going to mean, like, as an investment, like, it's very risky, and it's not going to mean anything if the market's collapsing in front of us, okay? Not financial advice. That's pretty much all we have today. We're going to be talking about, the FOMC hearing here pretty soon. We're going to be talking a lot about layer 2s and many other things within the NFT ecosystem. So stay tuned for that. But until then, happy hunting, friends.